I hope you will learn a lot regarding the risk management. What are the responsibilities of a risk manager? Then, what are the opportunities in the overall banking sector in regards to the risk manager or a risk management? And before starting this webinar, I would like to welcome our very own speaker, Mr. Shamil Shablo. He is an BFSI expert with an 18 years of experience into the sales and marketing, channel and business management, retail banking, and many other sectors. He had been an overall experience of 18 plus years. Mr. Shamir has completed his executive courses in the last year from IIM Lucknow with a specialization in fintech banking and the risk management. Overall, he is our product designer, trainer, and a content creator with for the past 8 months, and still now we are more growing with growing ourselves with the help of Mr. Shamir. So over to you, Shamir. And before again starting the webinar with the Shamir, I would like to inform you all that if you have any doubts or if you have any queries, you can drop in our chat box or in the Q&A box. Post the webinar, Mr. Shamir will like to take the questions ahead. And still, if you have any query which is not been answered, you can raise your hand anytime, and we will try level best to give you answer during this webinar. Thank you, and Shamir, over to you.
Thanks, Anita, for the brief introduction. Yeah, good evening, all of you. This is Shamir Sablok. As said by Anita, I have roughly 18 years of experience, right from retail banking to investment banking to risk to fraud to asset liability. Across the banking domain, I have been working, and from last 8 months, I am associated with Imarticus. Brief about me. See, this session is going to be quite an interactive session where I will be asking a lot of questions from you. So we'll go through some few slides which are there. And if you are having any queries, you can raise your hands as said by Anita, and then we'll discuss on those queries. Or after the presentation also, I'll be there for 25-30 minutes, and then we can have a one-to-one discussions on any of the topics which you feel like, or if you aspire to be a banker in the risk domain, then what are the opportunities? Because if I talk about India needs next 1 year, India needs close to 1 lakh bankers or 1 lakh finance professionals who can join fintech industry or banking industry or even NBFCs. And if I say so, one of the Imarticus is one of the leading platform where you can have the best of the best training and learn a lot, and they kind of assure you also on the job assignments and all. So we'll start off with the banking risk. So this is about in nutshell we'll be going about banking, about risk, about the emergence of cyber risk and the top trends in banking. So this is about we'll be going through in our session. So about banking, we all know that if I talk about Indian banking industry, it contributes close to 6% of GDP. And especially after 1960, the first, I'll say, the demonetization or liberalization started. And then the second phase was in 1990. And third one was in the 2016, when the demonetization, which we all would have seen, if you are not working in banking industry, at least you would have experienced through our parents or through the kind of changes which happened in the top currencies of India. And these were and the way what India was before 2016, I'll say, and what India is, like if I have to say, quote some facts, like the digital transaction before 2016 was just 2%, whereas digital transaction is right now hovering at 32%, which is quite a huge in last 5 years. From a 2% to roughly 30% is quite a jump. I'll say 15 times jump. And secondly, in 2013-14, our account population, if I say CASA, current account or savings account, in India, we had only 3 crores. But because of the Jan Dhan accounts and because of the rural attachments with the help of Aadhaar and JAM, which we call it, Jandan Yojana. Right now, the account stands at roughly 52 crores. So again, there's a huge, you can say 17 times growth in number of accounts also. And the best part is, since the 45 crores are beneficiaries of a rural sector, so they got a lot of support during the pandemic, whether it was 1,000 rupees per month. So you can imagine if 45 crores receive 1,000 rupees, the government's outflow is 45,000 crores. So that's quite a huge amount of money which went. But the best part is that money was utilized by the people who really wanted. So a lot of privilege was stopped. So this was about the banking and the emergence of the new age banking. And as the banking is evolving, the frauds and the risks are also evolving, and we should be knowing. And hence, there's a huge demand, if I say so. In next 3 years, we are looking at roughly 1 lakh people who are like fraud analysts or risk analysts, or you can say a dispute analyst, because these are the kind of profiles which are being coming up in various foreign banks or even Indian banks, or even a lot of consultancies like Deloitte, Genpact, and also they all are wanting such kind of people who have got a skill set of risk management. And the best part is all these things are available at Imarticus, so all of you can join and get the best of the best training along with the professional assistant in getting the job also. And these are the companies which are regular to Imarticus and recruiting the people. In fact, most of the batches are kind of 100% placed in most of these consultancies firm or NBFCs or foreign banks or corporate banks or investment banks or even the retail banks. So depending upon your background, your liking, your specialization, plus the specialization which you do. So then that's something which adds to your chances of getting a better job, better pay package, and the future is going to be brighter if you're joining at the right stream. So this is about the history. Just to start off with, banking is a very, if I have to say that there's the asset side, there's the liability side. But in the liability side, if I say the capital is very small in the banking industry, you can say 5 to 6%. So if anything wrong happens at the asset side, that is loans, advances, or investments, if they go back, if they go bad, then the entire capital gets eroded. And if the entire capital gets eroded at the liability side, then the entire then the bank will go into a bankruptcy. This is what happened in 2008 when the capital got eroded, and that's the reason, and that which led to subprime. I mean, the subprime crisis led to asset side being empty, and because of that, the entire capital got eroded, and because of that, the financial crisis happened, and it had a very multiplying effect. So that is kind of a catastrophic effect or a black swan event, which we call it in the financial terminology. So that's it. Then the banking industry is a very heavily leveraged industry. So as we go further, you should know why banking industry, because there is a very small equity. So please listen carefully, all of you, why it is known as heavily, and this is something which is a very common questions which have been asked in various banking interviews also, that why banking industry is called as a heavily leveraged industry is because of the very small equity. So anything which happens at the major catastrophic event happens at the asset side, the entire balance sheet goes for a toss, and which leads to banks may going into a bankruptcy. And this is something which is very important, that any bank should take care of its capital and should take care of its various CAR ratios. And as we go further, we'll learn couple of more ratios also, which are very important from the bank's health point. Like we have a human health index, same way banks also have a various index which is being defined by RBI. In India, RBI controls. And why I was saying equity is very small, the reason is because around 90-95% is what, around 90% is what is deposits. And deposit is something which is a customer's money. This is not a bank's. Bank is a custodian of that money. So legally, bank doesn't have a right on that money, but it is a custodian for that matter. Hence, Deposits are something, it's a volatility, and hence the volatility can lead to liquidity risk also. Hence, capital erosion is a part of, if I say so, can happen because of credit risk as far as the retail banking is concerned, or it can be because of the market risk as far as the investment banking is concerned. So corporate banking, investment banking, so market risk plays a very important role in that. Whereas the retail banking, like we have a normal retail banks across the India, like ICICI, SDFC, all these are retail banks and they have a different kind of a setup. Same way we have borrowings, money from other institutes, reserves are nothing but profits which we earn, and that is again flow back to the net reserve pool of the company. Other liabilities are nothing but they are the suppliers or the vendors. And loans and advances, if I talk about from the asset side, it happens to be roughly 60% weightage is given to the asset side and roughly 25%. So you can imagine 60 plus 25 makes it 85%, whereas 90% is the deposit side, whereas in asset side, we have roughly 65%, 85%, which can go. So it's a very attractive class, loans and advances, but they are very illiquid. That means you need to have you need to cater for this. See, the entire risk phenomena started in 1998 when the Basel One, which was situated, Basel is the name of a place in Switzerland, where the first convention happened for the stabilization of the entire banking industry. So in 1988, the Basel One came, and that was only a credit risk. Then it was further enhanced to Basel Two, which was again called as the 1999. The Basel II came when the market risk got added along with the credit risk, and then came a 2008, where the third risk, which is an operational risk. So these are the major three risks which are detrimental to any bank's health. So whether it's a credit risk, market risk, or the operational risk. As we go further, we'll be learning about these risks in nutshell so that you are able to have a clarity of your thought. So these are the types of risks which are generally there, whether it's a systematic risk or an unsystematic risk. Some are like controlled, some are macro in nature, some are micro in nature. So that means some are controlled at the RBI level, some are controlled within at the bank level only. So these are the different kinds of risks which are there. And overall, it is controlled at the RBI level. So these are some of the risks. As we go further, we'll be learning about it. So this is about risk management. That means it's an ongoing process. It's not a one-off risk, that it's a every day, every minute, a risk can be there in the bank, and this has to be mitigated, and hence a risk management team is set up. These teams are basically set up so that the potential losses can be minimized and the banks have a stable outlook. See, banks are not only there, like if I talk about banking industry, so banks, yes, it's a very important part of service industry. Like we have a tourism industry, same way banking industry is also very important. And as I've said, it caters to 6% of GDP. So risk management, that season is considered to be a dynamic exercise. That means it has to take care of not only management but shareholders plus regulators like RBI, CB, and other. We have got NCX now, commodities and all. So, and everybody has to be happy. That means if I talk about return on asset, then management has to ensure that the return on asset is best so that the management earns more profitability. As far as the shareholders, like all the banks are generally listed in the stock exchange, so all the shareholders, they are looking at return on equity so that their share price goes up. So not only banks have to manage the ROA, which is internal part of which is the profitability part, but they have to also manage the ROE, which is the return on equity. Along with that, they have to manage CAR, which is capital adequacy ratio. So as per Basel norm, the minimum worldwide, I'm talking about across globe, minimum worldwide CAR percentage is 8, whereas in India it is at 9% with a buffer of roughly 2.5%. So you can say 11.5%. So if a bank is having a CAR between above 13, Ideally, it should be between 15 to 20, not beyond 20 and not below 15. Like all the good banks like ICICI, HDFC, they are hovering at 18, 19%, which is tremendous, which is excellent. There were some banks like Yes Bank and all, they went up to 12%. And that's why then the RBI had to come in and they had to then pump in the funds with help of various banks. If I have to say, after the independence, there was one bank which by the name Global Trust Bank, which was part of the bankruptcy. And although it was bankrupt, but eventually it was taken over by Oriental Bank of Commerce. So as such, because of the strong legal framework and regulatory framework, RBI is very stringent on all these banks. Now RBI is equally stringent on NBFCs. We all know what happened in last couple of years as far as the fiasco in DHFL is concerned, or ILFS is concerned, or various couple of more NBFCs which were like India Bulls and all. So this is how it is. So they have to have a, the ratio has to be good. That takes care of the. So it is a kind of a, has to be a win-win situation for everyone. Like from the regulatory point, it should be roughly 17 to 20 or 17, 18. From the equity or point, which is from the shareholders point, the banking industry or the bank needs to have a healthy returns. Like we all know, HDFC is giving good returns, or ICICI is giving good returns. Like RBL or Yes Bank, their returns came down because of the issue in their CAR. So everything is kind of a correlated. If bank is profitable, by default, it's going to have a good equity. By default, it's going to have a good CAR. And same way, if CRR is not good, then it's going to have an impact on equity also and on asset also. So all three are kind of very important from the overall banking per se, and that's how. So if I have to say risk ka formula, if I have to say, name is nothing but net interest margin. Again, there are various formulas to calculate net interest margin. People who are already in banking industry, they know very well that what is NIM there. And then there's a manpower cost, then there's a commission cost, then there's an operational cost. So that's how we calculate the risk, and the formula of risk is taken out basis whether it's a fee, commission, or manpower or whatever. We'll start off with one of the important element, which is the liquidity risk. So liquidity risk is a very important risk. The reason is because the money which comes into the banking industry is quite volatile. Any money can come in today and can go out tomorrow. But if you are, or for that matter, if there is a fixed deposit of say 10 lakhs today, and tomorrow you give out that 10 lakhs for a 10 years loan to somebody else, and third day if a customer comes back and then asks that I want to cancel my fixed deposit and withdraw the money, as a rule you cannot stop him. Yes, you can put some penalty on it, whatever, 1% or 0.5%, but you cannot stop. But that is something which is a liquidity risk. So the same way, this was an issue. So in 2008, there were two parameters which were added. If I have to say, imbalance in maturity dates of assets and liability, as I was saying, 2 years of FD, the money is given for say 5 years of loan. So there is an imbalance, or there is kind of an imbalance between the maturity period or the realization period. Number two, like today FD rates are government of India has given, RBI has given a leeway. Like X bank can have a 7%, Y bank can have a 10%, Z bank can only give it 5%. So, and because of the digitalization, there is no holiday. So even on Sunday, I can break my FD and shift to say whatever IDFC or SDFC or Citibank or whichever bank I wish to, because this is all online. So there are few issues which are there. So both the asset sides and liability side, they are always in tussle. One says I need funds, or one says we are losing out on opportunity. And that's why then, because of the Basel norms in 2008, there were two ratios which were added. in liquidity, if I have to say liquidity risk. So these were the two ratios which were short form as LCR, which is the liquidity coverage ratio, and second was net stable funding ratio. I'll just stop there. Three questions. Okay, I'll continue. So these are the like ratios which are very important, and these are the ratios which are which every bank now has to purposely mandated by RBI that they have to maintain. So as I was saying, liquidity coverage ratio is nothing but every bank now needs to maintain a short-term liquidity which is less than 30 days. That come what may, they should have assets or liquid assets or liquid money or liquid flow of cash, so that if any under any circumstances, if urgency is required, money is available and there is no chaos in the market or in the financial industry. Same way, net stable funding ratio, which is NSFR. This is nothing but money if required for a longer term, which is say 100 days and above. So for less than 30 days, we look for an LCR ratio. For more than 100 days, we look for an NSFR ratio. So these NSF ratios. So these are the couple of ratios which are very important and hence needs to be taken into consideration while we are learning, while we are looking into the liquidity risk. Now coming back to the second, just a sec. Yeah, now I'll start with the second risk, which is the credit risk. See, credit risk is one risk because of which a bank and any retail bank can go bankrupt. So if I have to, it's a largest category of risk. So this can happen because of poor quality or because of issues which are has to be like, if you have to read that credit risk is the largest category of risk which is most dangerous. As I said, because of this risk, any bank, retail bank, if I have to specify, can go into a bankruptcy ratio. So what does it say? It says this ratio caters to both categories: borrower's ability to repay or borrower's willingness to repay. If I have to explain this, that borrower ability, that means we all know 2 years back there was a corona, a lot of people lost their job, a lot of people lost their businesses, the people were unable to pay their EMIs. So it kind of a black swan event. But there were a lot of people who were unable to pay because of the financial issues. And we all know there were so many people, like if I have to quote a couple of people, we all know what happened to Nirav Modi or Vijay Mallya, or there are so many other people who had the money, but their willingness to pay was not there. So bank has to cater to both the categories. Number one category is borrowers' ability to repay, and number two category is borrowers' willingness to repay. So this thing has to be taken into consideration, and hence they have to ensure that everything is taken, whether it's a what do you call, as per the contractual obligation, the customers are bound to pay, and if they are not, then it is a part of a process to take it back. Settlement can be done. This is kind of a, you can say, a credit risk in which you can say it's a part of an expected loss, but it has to be taken. And credit risk can be because of various reasons, like you are having a poor loan credit writing facility, or there can be a laxity in credit level, or they can be a direct lending, or just to capture the market, you are giving a very easy lending so that the market belongs to you. But at the long run, what happens is people are unable to pay. Then it spoils the brand, it spoils the reputation of a bank, plus it spoils the sentiments. See, there's a saying in banking industry that bank runs on trust, but the employees of banks have to verify, trust but verify. So we cannot have a situation where the trust is broken. We all know there was some rumors in 2008 about ICICI, and within 3 days, all the ATMs were, money started coming out when the subprime crisis happened in America. So the best part about ICICI, they did not stop anybody, and eventually, because of that trust factor which they gained over a period of time, ICICI Bank grew. Or right now, what happened a couple of years back in Yes Bank, the trust factor was that Yes Bank is now growing. From a 5 rupee share, it has come down to 16 rupees share. Although it was hovering once upon a time at 500, 600 rupees. So again, over a period of say next 3 years, 4 years, it's going to go up if every management and if things are in place. So that is what is a very, very important risk, which is the credit risk. Then comes market risk. So if you talk about investment bank, like we have got Barclays, we have got BNP Paribas, we have got JP Morgan, or we have got Citibank, or we have got even HDFC and ICICI also have an investment or a direct banking, private banking, which they call it, department. So they also have. So this is something which is related with the fluctuation in market. It can be because of it can be because of equity price which are going up and down, like we all know in last 3 months, because of the couple of reasons. We all know the reasons, because of the war which started in February between Russia and Ukraine. The oil prices went up, and because oil pricing is something which is a gold, and if the and which led to gold prices going up, but it was kind of an instability. Then there was a chances that in India Corona 4 may also come in, and a lot of things started. So the instability plus the dollar, the fluctuation in currency. So there are so many other factors which were affecting interest rate, foreign exchange rate, commodity prices, equity prices. So all these things are very important from the overall perspective from the investment banking. Hence, market risk can be a dangerous risk for the investment banking, and this risk can also lead to a bankruptcy. This risk is also known as mark-to-market risk, or price risk, or an interest rate risk. Different names are given, like we are subtypes are there. It is also known as systematic risk. There is an interest rate, equity, currency, margin, country risk. Like all of a sudden, if there is a, like we all know what is happening in Sri Lanka, we all know what is happening in Nepal. The economy of even Bangladesh is not very great. Myanmar, we all know. So all our bordering countries are having issues, and that is quite risky. If I talk about from India, already the tensions are high between China and Pakistan is kind of from last 75 years not ready to learn. So because of this, there can be any kind of risk, and these risks banks have to be prepared on papers also. If God forbid tomorrow something happens, then what's going to happen? How will you going to return the money, or what is going to happen? Like we all know, there was an amortization. So that was something which was pressed on by government, and all the banks supported. So these are the things which are very important. There's the fourth type of risk, which is an ALM, which we call it as the asset liability mismatch risk. So this is also one of the risks which is handled by every bank has a team or a department called ALCO, Asset Liability Committee Department. And this community department helps that a 2 years fixed deposit is for a 10 years home loan. So there can be a change in home loan, there can be a change in FD rate. So because of which the profit, it can go into a negative for bank, it can go into a negative for customers also. What if the prices of the property comes down drastically? Suppose a 1 crore property was at and customer was given say 70 lakhs of loan. All of a sudden the property came down to say 50 lakhs and customer refuses to pay. That you take the property, so it's kind of a loss. So there are various ways like a dollar gap approach or duration gap approach by which all the credit analysts and the ALCO team members calculate in banking. Then comes operational risk. This was one of the very important risks which got added in Basel III norms in 2008 after subprime crisis. So these were the risks which were very important. And these risks can be because of employee error, can be because of system or policies, because of system fraud, because of system failure, because of criminal activity, because of business disruption, anything failure in IT system. So it can be anything. So, if I have to say that all these operational risk was part of a strategic risk also, wherein these are like it can lead to a reputational loss, it can lead to a financial loss, it can lead to an operational loss or a governance or a competitive loss. So these were the kind of risks which were could arise because of strategic reason or regulatory risk, because of which, like we all know, that it can have an adverse effect. Like government of India wants to give out loans so that prosperity is there. RBI is stringent that the loans will be given only to the credit worthy people. So there's always a tussle between a growth and to manage the inflation and to manage the growth. So RBI checks the inflation, hence takes out the liquidity from the system by increasing the repo rate, whereas the government wants that the market should be flooded so that there is more opportunity and rate of interest of loans are less so that more people are able to buy. So it can have a regulatory risk or a systematic risk. So these are the things, risk categories are there. We have already spoken about various risks, right from business risk to operational risk to a project planning risk to a quality risk to a technology risk. So different risk, different. It can have an external fraud. It can have an internal fraud. It can have a fire in some server room. It can have a data can be breached or data can be lost or hackers may be able to with the help of cyber crime and cyber networking. There can be various reasons. So as we'll talk about, because cyber risk, these are the internal risks and cyber risk is kind of, you can say, an external risk as well as it is a sub part of operational risk also. The reason is because of the digitalization happening across the globe, across the India, and the kind of speed with which it is happening. So a lot of things are changing now. As I said, the Indian economy was cash 98 to 99% till 2016. Right now, it has come down to say 70% cash and 30% is still digital. And the plan is next 5 years to bring it down to say 20% cash and 80% digital. And as we go towards digital economy or as we go towards that, yes, corruption will come down, but the level of frauds are going to go up. And hence, cyber risk is very important risk. So, if I have to quote in the example, it can be a cyber risk can lead to a financial risk as well as business interruption. Like if I have to quote some number, it was roughly 71,000 crore worth of cyber risk between 1819, which has gone up to 2.5 times, 1.85 lakhs in 1920, which has further gone up to close to 2.5 lakhs in 2021. So the level of cyber crimes are increasing. The level of, and I'm talking about lakh crore, which is huge money. So, and this is a global data, yes, but in India, gradually and slowly, people are getting educated. Hence, we have to have a foolproof system in place, and that's why then Indian government is very ensuring that the tokenization takes place, so that the vendors are not able like Amazon or Domino's or Flipkarts and all are not are not allowed to take the client's credit card number or a debit card number, and they are processed in some server and a token is there. So that is what is a tokenization process. Now government of India is planning to bring in uh, a blockchain technology, which is nothing but the disputed ledger technology, or these are the ways by which government is planning in next 5 years. See, a lot of things are going to be obsolete, if I have to say, from retail banking. Like you can say passbooks and checkbooks in next 5 years may vanish. Now machines are being put up which are going to be helping, so the branch size will reduce. Number of headcounts will be more towards fraud, risk analysis, dispute management, rather than at the operational level or the back end level, because of the digitalization. I don't know, next 5 years, the branches size will be say 500 square feet rather than 2,000, 3,000, 4,000 square feet. So that's going to be reducing the cost of the bank. Employees are going to be at a different level with a different skill set. Yes, there will be a enhanced sales team, which is going to be managing the front end sales and acquisition. So these are the types of, if I come back to the cyber attacks, so these are the types of attacks which are very, malware being the most common and most dangerous, I'll say. All these virus, trojans, spyware are part of malware. Then there is a ransomware, then there is a adware, botnet. All these are part of malware. Malware is one of the very common way of putting a malicious code in the computers or in the network and then stealing the bank's data, or putting bank on ransom that we have hacked so many customers' account. If you don't pay $1 lakh or $2 lakh, the money will be going out. Or SQL injection, which is a structured language query wherein you are putting in a program in the database to steal, or man in the middle, wherein a person who is there as a programmer is using, or a hacker is using your internet device through an unsecured Wi-Fi. So if you are not using a VPN, you are using an unsecured Wi-Fi or a free Wi-Fi, then your data can be breached, or your numbers, or denial of service attack. That means they put so much of traffic in your account that your servers or your system becomes slow, and hence you are not able to do your business. Phishing was a starting point of all these cyber attack, and then came malware. So phishing is kind of a word which is there through emails and through credit card data or information. They try and enter and they try and steal the data. So there are various identity thefts or an account takeover thefts which are there, and which can have a catastrophic effect. As I have already told you, the kind of, like, it's close to 2.5 lakh crore. You can imagine how many zeros are there, and that's kind of a losses which have been borne by companies or even by customers because of their casual approach, or because of their silly approach, I'll say. So these are some of the attacks which are there in the system. These are the databases. Now we can see security is as strong as the weakest link. Like there was a hack of Facebook, a stolen data of 57 million, breach of, that is an Uber hack which happened in America. Then there was again a 2 lakh wherein which was kind of a ransomware, and this was at the medical facility again in America. Then even in India, if I have to say, there was an HDFC bank outrage wherein the data was kind of a, then there was in Bangladesh, $951 million was tried to siphon, but eventually a lot of money got recovered, but still $81 million went from you can say fraudsters from Vietnam and all these Ho Chi Minh countries, cities and countries. and eventually that was not recovered. We have seen Indian debit card, 3.2 million debit cards were compromised, and that was something which was very bad. And these things happened in 10 years back, I have to say so. So it affects, these are the reasons. As I told you, 1.85 lakh crore was kind of a attack which happened. Now the European country or European organization or union have put up a GDPR, which is General Data Regulation, Protection Regulation, wherein they are putting penalty. Like if you are not telling that if something has happened, they are going to put 4% of your annual global as a penalty. And if you are not informing, then there is a mandatory breach. Or if your data are weak, then it's going to be a very, very tough penalties by European countries. This is what OSAP, I don't know whether you know about this or not. I would like you to do a Google and learn. So this was basically founded in 2001. This was basically to improve the securities of various software. So there are 32,000 volunteer people around the world who are helping customers. This is a site which tracks NorSecOp. So this site helps in tracking various attacks which happen across the globe. Across, you may be sitting in Nigeria, attack maybe in India, or you may be sitting in India, attack maybe in Australia. So they can be an attack location, they can be an attack target, and they can be an different ways and means by which attacks can happen. So this is one of the very important sites which is being monitored by across the world. So these are the challenges, you can say, or stress, or this is something which I would like all of you to remember. This slide, banking is necessary, banks are not. So these are the things which are very important, like how banking is changing. The reasons why banking is changing is because of demography, because of urbanization. You will be surprised to know in India, it's close to 72,000 people are births happen every day. So you can imagine all these customers, once they are infant or even they are turning 3-4 years, 5 years, they start opening accounts, and then they have their Aadhaar cards, and they get some school subsidiaries, or they have their admission subsidiaries. So you can imagine 72,000 births are happening in India. And in next couple of years, India will surpass. Right now, population of China is close to 143 crore. And India is 140 crores. So in next 3 years, India is going to add 3 crore more people. And this rate is increasing. And the best part is, because of the good medication, the mortality rate is also reducing. So the people who used to die by 67, 68, now average age of India is 73, 74. And over a period of time, this is going to go up to 76, 77. So if the old people age goes up and the young people are, the births are happening, it's going to have a very different impact. Same way, urbanization, digitalization, the core banking is changing from a closed banking to an open banking. And that's when all these fintech companies and like Paytm, PhonePe, and all these Google Pays and all are coming, and they are helping, or they are kind of helping helping us in making us better equipped. Industrialization, like making India. So the growth is going to go from 15% to 30%. Education is like expansion, equity, culture, employability, excellence. So this is something which government of India is falling from last 5 years, wherein everyone needs to be educated. The skill impartment is given at after 12. Financial inclusion, Jandan is a prime example by which 45 crore accounts have been opened. That is something which is financial inclusion. Global integration, which we are already learning that things are changing. If I have to do, trends are like hyper personalization. Things are changing, like banks and fintechs are joining hands for the best of the best service, so that things become, we are already sitting on 100 plus unicorns, and in next 2 years, around 250 unicorns are going to happen in India. If I have to say, from the unicorn, number one is America, number two is China, and number three is India, from the overall perspective. And the way it is growing, America is also going to come below us now. As far as the digitalization is going to take place, the core banking is changing into an open banking. As I said, data sharing is happening. Banking as a service, BaaS, which we call it in the cloud, is happening. Embedded finance, wherein which we are using right now. The finance part is getting added with the e-commerce website. Like now we are able to pay directly from a bank to a Google, through Google Pay or through credit card or through direct transfer, and pay for a Domino's pizza or Flipkart, Amazon. So what is happening is amalgamation or edutech or food tech or travel tech, or for that matter, e-commerce and all. So because of the open architecture, the APIs are getting created, and because of which the amalgamation is happening. So this is about it. In last 45 minutes, whatever I have spoken, now August gathering of 39 people can ask their questions or whatever they have, they can have. Anita, are you there?
Yes, Samir, I'm here.
Yeah, I'm through. So you can open the answer, whatever.
So there is only one question, I guess, for now, that can we get this PPT? So Shubham, I will be able to send you the recorded lecture, the recorded webinar, which you can able to see, not the PPT.
Any more questions from 38?
Updesh Madan has raised his hand. Just let me allow him to talk. Updesh,
Okay.
you can unmute yourself and ask the question.
Hello.
Yeah, Updesh Madan. Yeah.
Am I audible, sir?
Yeah, you're audible, Updesh. Tell
Could
me
you
what is
say something about forex risk?
See, that's quite a vast. If I have to say, these are all parts of market risk.
Right.
Forest risk, yes, it is because of the market right now. Like yesterday, for the first time, it touched 80. If I have to say currency risk, so a
Yeah.
lot of things are dependent on that. In forex, if I have to say, there is a bill, like there is a bank guarantee, there is a letter of credit, they might be a forward client, they may be a swap, they may be whatever, they can be arbitrage, they can be hedged. So it can be possibility that customer may have done an arbitrage, or they may have done a fraud booking, say at 79, and if a dollar is already at 80, so it's a loss to the bank.
Yeah.
Because then this is something which is there. Or if tomorrow dollar goes back to 76 rupees, then it can be a profit to the bank. So, or whatever. Like if the dollar goes up, down, then all the exporters are going to like enjoy, and same way vice versa for the importers also. So that is something which is there, and everything is kind of a uh, correlation is there, and that's then if you go into detail, see, you will be surprised to know a credit risk. There is a roughly 32 books are there, and each book is 1,000 pages.
Right.
So that's how vast the credit risk is, and
Correct.
roughly 27 books are there in market risk.
Hmm.
So that's how, and market risk ka part is this currency risk, interest
Right.
rate risk, forest risk. So I hope you have understood.
Thank you. So nice of you.
We have one more question. Can a company show positive cash flow while facing financial problems?
See, that is just a way of managing the balance sheet. Otherwise, it's not possible. if the वो कहते हैं ना हिंदी में अगर बैंक खोखला है, so how can it have a cash flow then? So that's something which is taken care by all the various ratios, and that's how ratios are very important and they are looked upon. Whether the company is stable, whether the company is giving dividend, what's the share price, equity price, what's a market. Nowadays, you would have seen that top companies which are taking care of their employee friendliness, whether employees are happy or not. So these kind of earlier these things could have been hidden, but now not possible. Things are going to come up. Sir, I am a graduate from BCom. I want to make career in risk management. See, you just have to join a Imarticus. I'm sure Anita will be able to guide you, Vivan. There are a couple of courses. You can do those courses and then you can have. See, industry is going step. See, India is one of the leading country. The reason is why? Because the government is spearheading rather than the companies telling to government. Government is telling to company that we want to do this, we want to do that. So right now, Indian government is proactive and they are way ahead than what others are thinking. In fact, they want that every 10 days there should be a unicorn to come up. You'll be surprised to know in last 1 year, 69,000 startups have started in last 1 year. 69,000, which is highest in the world. So Indian economy is growing, and if you plan to be in this, then so how does bank recovers money if bank declared? See, in India there are a lot of checks. As I told you, there was only one bank which got bankrupt, which was which was Global Trust Bank, and which was also taken over. That means all the assets and all the bank accounts and details were taken over by Oriental Bank of Commerce. Like we all know what happened in Yes Bank. In fact, in last 6 months, similar story was happening in RBL also. So our top management was removed. Earlier, things were different. Now there's a team of people who are there, a team of 8 people, 10 people. We all know what happened with Chanda Kochar. She was the only signing authority in 2011-12. Now they are close to 8 to 10 people who sign on any loan ticket of 500 crores and above. So then if there are 8 to 10 people, that means there are going to be so many people responsible. Hence, see, as far as Ajay Khedkar has said, in India, which banks are too big to fail? ICICI, SDFC, and SBI. These 3 banks have been given a tag of too big to fail. And second 3 banks are Bank of Baroda, Punjab National Bank, and Kotak Mahindra Bank. So next 3 are these 3. So first 3 are SBI, SDFC, and ICICI. Is there any books or study material? Risk management. See, users have to type in Google. You will have hundreds of books here. And best part is all these books are available in Amazon also. Learn the basics like credit risk, market risk. All these are various. You can go to any Google site. You will have all these things. Learn little bit. I'm not talking about learning about the intricacies. Yes, if you want, you can join Imarticus. They will teach you the formula also, how to calculate risk, a credit risk, or a liquidity risk, or a operational risk. There are various formulas, even cyber risk also. See, now cooperative banks are changing. RBI is governing them also and are putting a leash on them. And hence, you will find after 1st of October 2022, a lot of NBFCs are going to merge with banks because their risk level or risk rating is going to be at par with banks. You would have seen SDFC has already merged with SDFC Bank because it makes no sense in doing business in negative. Hence, you will find a lot of bigger NBFCs like Mahindras and Bajaj and all these very soon you'll find them merging with some of the other banks, or they have to have a very high level of their own fund flow. Then only they can sustain. Any more question? Career and risk management guidance. I've already spoken with one. Private banks, yes, private banks are already covered. See, private banks are part of scheduled commercial banks. And scheduled commercial banks were foreign banks, private banks, and PSUs, which are public sector undertaking banks are there. Now, even cooperative banks, which were some of them were unscheduled banks, even they are coming under the purview of RBI. Post demonetization, a lot of loopholes were there, and hence now government is already tightening their leash. Nowadays, Nidhi Bank is blooming. Your views on this? Kalapa, Dangar. Nidhi Bank, I have not heard about it. Can you brief something? Kalapa, Dangar. Anita, can you unmute Kalapa, Dangar?
Sure, just give me a moment. Done. Kalappa, you can ask your question.
Hi, sir. Good evening. Kalapa
Hi.
this side.
Yeah, hi Kalapa.
Yeah, I am from Kolhapur, Maharashtra. So
Okay.
Nidhi Bank is a concept by MCA. So it is, it will be registered as a company
Okay.
with 7 directors, and they will function all the functionalities as a bank. So they can,
Okay.
take a money from people as a FDs and all the saving accounts also, and they can
Okay.
give a loans as well. And this concept in Maharashtra is booming.
Okay.
My observation is that within last 6 months, around 500 plus Nidhi Bank has been registered.
Okay. Okay.
At the village places also, they are coming up with all the banking facilities.
Okay.
And
That's
lots of fraud also happening in this.
lots of
Fraud also
fraud,
happening
okay, fraud.
within the
See,
Nidhi sector.
it might be pertaining to only Maharashtra. And once if such thing comes up, like RBL was once a Maharashtra Ratnakar bank, but now
Correct.
it is a national bank, Pan India
Correct.
bank, I'll say. So,
Correct.
thanks for the update as far as Nidhi Bank is concerned, as I was not aware about this specific to Maharashtra. But I would not like to say, because if RBI is giving a permission, then some norms are going to be there. Like if I have to answer Ajay, yes, thanks Kalappa for the information.
Thank you.
Ajay, if I have to answer pertaining to Kalappa only, if I'll continue, that Ajay has written consider banks. See, the number one criteria is capital adequacy ratio. That is something which is very important. I have already shared all the various, whether it's a return of asset, return of equity, capital adequacy ratio. Then we are having an internal CRR. We are having an internal SLR. Then there is an marginal lending, which is MCLR. So there are different ratios which are considered. Yes, balance sheet has to be good. The equity, as I said, 5 to 6% has to be intact at all the levels. It should not go beyond that. See, so I hope Ajay I have answered your question. Richard, what types of careers can you have in risk management? See, now risk management is not only about credit risk or a market risk. Now you are having a dispute management, or you are having a fraud AML analysis. You are having a various SEBI guidelines are there in DMAT. So that is also part of risk management, wherein a depository risk is there. Then you are having a various financial risks are already there, which I have already shared, which are part of internal risk. External risk like employee carelessness can also lead to a lot of goof up. Like we all know what happened, that one of the Citibank's ex-customer forgot to put, lost that touch of .000, and that point was removed. So some Arab, some 30 or 40 lakh crore was transferred. Then eventually that came back, but anything can happen. It can spoil. Suppose it would not have come back, then it would have been a detrimental effect on that bank and on overall banking industry. See, banking industry is a very, very trust-centric industry, and hence RBI has a very strong leash that if anything happens, then the trust factor will be broken. So which they don't want. Like we all know what happened in Yes Bank. We all know what happened in Punjab and Mercantile Bank in Punjab and Maharashtra Bank in Bombay. So, but nothing has happened. See, risk management is, see, let me tell you, they used to be just a sales management, like we have to have CEO and CO of any bank. Now to tell you, all the banks have chief risk officer. Now all the banks have chief technology officer. Now all the banks have chief vigilance and compliance officer. So earlier these C-suits or these risk or security or technology or compliance and vigilance, they were just a side office. But now they are kind of a main office and they are part of the main banking stream. They have to ensure that the entire infrastructure of a bank is safe. They have to ensure that the reputation of a bank is safe. Like I have given you some example what happened with HDFC Bank, that for 2 days there was a server down. Now, as I have already told you, HDFC is part of too big to fail. So if anything happens with SBI, HDFC or ICICI, it can have a very negative impact on entire Indian economy. So that's when the level of technology is going up. Hence, the level of frauds are going up. Hence, the level of dispute managements are going up. So it's kind of a cat and mouse, wherein at times the cat is bank, at times the cat, you can say, is the culprit who runs. So it's a catch-22 situation. So a lot of money is not getting spent, especially after the architecture, which was a closed architecture, is turning out to be an open architecture. So this is something which is happening across banking industry, and hence you will find a lot of jobs. If I'm not mistaken, close to 1 lakh risk analyst jobs are there. And risk analyst is a global term. There are 22 terms below risk analyst. Like there's a dispute analyst, there's a AML analyst, there's a FAT analyst, FATF analyst, then there's a income analyst. There are so many subparts. Like we all know the 3 layers of layering. So these layers are now having a separate analyst to check where the money is getting flown, or what is SWIFT, how SWIFT is helping in flowing of an illegal money, or how credit card is supporting in anti-money laundering, which is you can say a part of electronic money transfer, or part of like the countries like North America and all, where Mexico, Cuba, these, if I talk from the American economy, all these countries are very notorious and they are very active in drug cartel. So a lot of blood money and this drug money flows. Cuba, which is famous for cigars, Mexico for drugs. Then you have already seen the world's #1 country, El Salvador, which has made cryptocurrency legal. So these things are very important to check, because a cryptocurrency, you don't know from where the money is coming, where the money is going, and it's a closed, guarded loop. So that's in India, cryptocurrency, people are still not, the government is still not very comfortable in having its own, they may have their own digital currency, but to legalize a cryptocurrency, I doubt. Although there are 1 crore people in India who are already active and are trading in cryptocurrency, but just imagine the dollar, the value of, if I just have to say Bitcoin, is reducing day by day. See, Sindhu Shinde is asking about AML risk and compliance. See, that is something which is very good. As I told you, that there are various departments. There are various, like there's an identity theft fraud department. There is an account takeover theft fraud, account takeover fraud department. Then there is a dispute management department. Then there is a risk analysis or fraud analysis department. And fraud can be anything. They can be various types of disputes. They can be processes which, if not followed, and it's an ongoing vivacious circle. So this is something which is there. Yes, Sindhu, if you are learning already into that, if you learn something which is more, it's going to add to your CV and it's going to add to your knowledge base also and a skill base also. So that's going to add additional wing to your further employment. So if you plan to do it, please go ahead and do it. See, more and more skill if you can have in a specific domain, that's going to enhance your quality of your CV, and your financial aspect associated with the CV will also increase then. Is it true government planning to privatize all banks except SBI? See, that is something I cannot say. But yes, from 34 banks, they are not 12. Very soon in next 2 years, 12 will become 5. See, government has made it very clear that they are going to be in the policy department. They are not going to be in the running of banks. Already Air India is privatized. So as such, now there is no private, government-owned airlines. So same way, you never know, 10 years down the line, there may not be any government-owned banks also. Or you may not know, there might be so many banks also. If you go back in one of the slides, I have said that banking is important, banks are not. So that is going to happen very soon. So this is something, see, they are also safeguarding. You will be surprised to know frauds through Google Pay, through Amazon Pay or Phone Pay is not that much. Unless you do a mistake in typing a wrong digit or wrong account number or wrong IFSC, then that is something which is your fault. Till today, malab, touch wood. And the best part about it, most of these are Aadhaar linked. And till today, you will be surprised to know every day 5 crore of Aadhaar link transactions are happening. 5 crore of Aadhaar link, and not even a single fraud has happened till today. Similar to Aadhaar, there is a SSN number, which is a social security number in America or North America or South America. That's something very important for financial health or for their credit cards and for their security. There are a lot of breaches happening in that. But as far as Indian Aadhaar is concerned, the technology is something which has ensured that the breach has not happened till today. So that is something which we all can be proud of. As it is, an Aadhaar-enabled system is world's #1 and the biggest in world. So that is something which is quite commendable. Although yes, we are 1/5 of world's population, but still we are maintaining. And in last, and because of this Aadhaar enablement only, the vaccination was smooth, and the ration card fiasco has stopped. After ration card got linked to, there were 3 crore bogus ration cards which are now not there. So a lot of money of pilferage has stopped because of digitalization, and because of that, yes, government is planning to make it a open and level playing field, but these companies are helping. That's what banking industry is changing. That's it. Yeah, Anita, any more questions?
No, I hope everyone has their queries get solved. If anyone any helps, if you have any kind of doubt or any kind of questions, I have just texted you on the chat box the WhatsApp our link where our counselor can get to you privately and you can ask your questions there. Apart from that, I have also added one link with our course that is CIPOP Certified Investment Banking Operation Program, where you will be able to understand more about the investment banking, risk management, retail banking. And guess what? It's a job guarantee program, so, but it's only for the working professional who have an experience of 0 to 3 years. So the people who's having a much more experience in this industry and still want to learn, we have other courses called FAB CRO, which is in regards to the finance sector only. Everything is available on our website. You can go there, you can browse the program, the brochures, everything is available, including the fees of the courses. And in the chat box or in the Q&A box, if you have any more questions, same you can ask there also. There you will get a live counseling done by our counselor. Hope this helps, and thank you so much, Sami, for taking such a wonderful sessions today. I hope everyone has enjoyed and they have learned a lot with regards to the risk management. Same way for the next month, we will come with a much more informative topic for everyone. So be ready for our next session. Again, thank you so much, Shamir.
Thank you.
I would like to sign off this webinar for today. Thank you, guys.
Thank you.
Bye.